Good afternoon, Julie from Future Financial Planning Group. I'm excited to talk to you today about TFSAs, tax-free savings accounts. I'm pretty passionate about tax-efficient planning. And when a client comes to me and they haven't heard of a TFSA account, or perhaps they don't know all of the rules with a tax-free savings account, this is a conversation that I do really like to have with them. So tax-free savings account was created in 2009. And if you are over 18 years old, you can open a tax-free account. It does have to be after your birthday, however, rather than being 18 sometime during that year. So just wait till your birthday, and then you're able to open a tax-free savings account. With a tax-free savings account, we are only allowed to put in or contribute a certain amount every single year. For 2021, the limit is $6,000 plus unused contribution room. And I have a great calculator that I have developed. It is on my website, but I will supply the link in the comments as well as the description to this video. So please have a look at that. And I hope that it will help you to determine exactly how much contribution room you have available to you. If you were 18 years old in 2009, you would have $75,500 of room if you have not made a contribution in the past. You never lose your contribution room if you're unable to make a contribution in one given year. That simply carries forward. If you are making a withdrawal in 1 year, you are able to recontribute that same exact dollar amount the following January, so in a new taxation year, or you may be able to still contribute that amount in the same year as your withdrawal, as long as you have enough contribution room. We would want to be very careful that any new contributions during the same tax year do not give rise to any tax penalties. If you over contribute, there is a 1% penalty per month that CRA would levy. So that is a pretty hefty fine. You can hold anything you want essentially inside a TFSA account, be that a mutual fund, a stock, a bond. So it is an investment account, just like an RRSP, just like a non-registered account, RIF, RESP, RDSP, that sort of a thing. Again, the main benefit with a TFSA account, with a tax-free savings account, is that all of your growth is tax-free. Any withdrawals are tax-free, and you never ever lose your contribution room. TFSAs are great for estate planning purposes. You can name a beneficiary on the account, and if you have a spouse, you can actually designate him or her as your successor annuitant. What that means, the difference between a beneficiary and a successor annuitant designation, is that rather than the account proceeds being paid out to the beneficiary, if you are able to name your spouse as your successor annuitant, they essentially get to keep that TFSA account. So they get to keep the tax-free status, and it does not affect their contribution room. You can have more than one TFSA account, but just keep in mind that you don't want to over contribute, because as I mentioned, the penalties can become a little bit hefty. And if you want to do a withdrawal, you may consider doing a withdrawal later in the year, perhaps in December, especially if you're thinking about moving your account from one institution to another and you'd rather not do a physical transfer of the assets, but instead you could make a withdrawal in December late in the year so that you can recontribute that entire amount to perhaps a new plan in January. You do not risk going over your contribution room that way, and you haven't waited too long for the whole year to do it because you've actually just done it in December. So it's close to January when we get that additional contribution room and when you get to recontribute any withdrawals from a prior year. So I hope that helps a little bit on the TFSA conversation, and please feel free to visit my website, www.futurefinancial.com, and again, have a look at the calculator that I will give you the URL to in the comments. Take care.